Traders, welcome back to our price session trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart. I'm going to talk about how we can use price session rules to help us navigate today's market. So this is ES for today, and we can see very unique market, very unique structure because it is super volatile. And what I can see when the market is volatile, that the bars are gigantic. And this is important because I have to adjust my risk to reward ratio and my money management strategy. Because what you don't want to do is you don't want to take a losing trade that would wipe out 6 or 7 trades because you're following the previous money management strategy when the market is normal. So this was difficult day to trade. Bars were gigantic, 10 points. So you definitely need to scale down when you see something like this. This doesn't happen often. This is quite rare, but it can happen once or twice a year. So you need to scale down. You can go to micros, or what you can do, just sim trade it, get the experience, sit on the sidelines, because you don't want to take a hit and maybe blow your funded account, etc. So you have to be careful. I wanted to record today's session, but once I saw market printing so fast and bars gigantic, there's no way I can manage to even record it. So today market was very, very unique. A lot of bars on the chart, not that many great setups. It was hard to trade it because for the most part it looked quite sketchy. Also I had issues with data, with bars. I kept reloading all the time. Bars kept changing. This is the overall structure, big downtrend. Now what you have to do on a day like this is you want to make your job as easy as possible. We started with a very strong sell-off, and you can see the structure is not easy to trade. It's quite sideways with bearish tilt. When I'm watching a structure like this, I want to navigate it safely. So what I want to see nice confirmed channels, something like this. Okay, this is always what I'm looking for, either to the upside or downside. I want to see market geometry, confirmed channels, and I want to follow the trend line rule, because there are areas like here or like here when nothing is really confirmed, it's going to sideways. So your best bet is, when you're watching this, just be careful, be patient, and just wait for price action to give you nice confirmed uptrend or downtrend. We have first decent setup here, second entry short. The short option is in play, but because the second entry short retraced too much, you can consider, but you can see almost 10 points, almost 10 points. So definitely also need to increase your target profit. You cannot be scalping 8 to 10 ticks. This is massive ATR. So you definitely need to increase your target profit as well. It basically still needs to match your previous risk to reward. You just need to proportionally increase the stop loss and increase the target profit. Break a new extreme. Overshoot can generate stronger pullback in the opposite direction, so you cannot go long here because if overshoot, also the channel is quite sketchy. Break new high, uptrend played out. Downtrend is working lower, and now this is finally what I want to see, some clean push down, confirm downtrend. We have a second entry short, new low, first entry short, second entry short, which once you have downtrend, you want to take a second entry short. It's the hybrid setup at the key entry point. But this second entry short right here is above EMA, so I can't take it. I would need a lower high confirmation setup here that didn't form, and because this downtrend is the break new low, the market keeps working lower, keeps working lower, keeps working lower, we can redraw the secondary channel as well, because you can see how strong this downtrend looks. On the first entries, EMA keeps rejecting. There are two decent setups here, a lower high, once again 10 points. This, so like a resistant bounce, was decent size, but 7 points as well, so definitely need to increase the target profit. Now when I'm watching this live, my bars look completely different, so that can happen when the market is super volatile. The data is changing once you reload. Not really easy to trade it today. Breaking extreme downtrend played out. I'm going through this fairly quickly because it would take forever to go bar by bar. You have a second entry long. Now this looks good in hindsight, but if I'm going to zoom back, you can see we've been working lower quite a long time. So it looks good locally. Spike up needs to get new high, you know, but because we've been working lower for such a long time, it's a little bit more advanced. Once again, this is what I like to see. Confirm uptrend, break new extreme. I want to see push above EMA because it's the assumption that the buyers are about to test the new high. We have a high-low confirmation setup above EMA to test the new high, but it's an inside bar. This bar didn't get a trigger. We have a trigger above inside bar, so I can't really take this. So I want to see felt second entry short, and by the time I get a felt second entry short, it's not for the EMA. It's not for the EMA. So this is what we like. We want to see nice confirm leg up, nice confirm uptrend, and take these high probability setups. These setups are great context wise, but unfortunately they didn't form them well. Far from the EMA here and inside bar here. Break a new high, uptrend played out. So this is no trade zone for me because uptrend played out. There's a lot of bars, and once again I want to see nice proven trend establish, which I'm going to connect these swings off of these highs. Nothing here apart from the EMA, only first entry short. We have a two-legged pullback up. We expect new low for this downtrend. I have a lower high, but it's above EMA, so I was thinking we can get a failed second entry long that never formed. Remember, this downtrend still needs to get new extreme. Push below EMA is confirming the resumption of the bearish push phase down, and we have actually great setup. First entry shows second entry short, new high, first entry long, second entry long failure. Double high probability setup. Great setup, downtrend is new low. Then we entered a consolidation. This is where my bars are really messed up. You have repeat pattern basically. You have textbook repeat pattern. Looks exactly the same. Another double high probability setup. Remember, the bias still dictates that we need to get new low for this downtrend. So you're selling second entry short, and then you enter just pure consolidation. This is pretty much no trade zone. You want to sell at the top, but no good short here. You're not fully close to the resistance. You can pull it lower, but you know, not that many great sells. A lot of double bar entry. This one is good, but it's way too big. 24 points. Jesus, so you can't really go short here. Yeah, difficult day to trade. You're just watching it mainly. And no good setup here. Nothing here, just congestion. These are the areas that I don't like. I always like to trade something like this on a day like this, or uptrend like this. These areas here and here where nothing's really confirmed and just going sideways, up and down. These areas you want to avoid. Yes, it looks good in hindsight, but when you're watching this live, it's printing fast, it's too unclear. So always wait for these trends. These trends, they're much easier to recognize. You can tell, once again here, easier to recognize high-low confirmation setup of the second entry long. This spike needs to get new high. Uptrend is new high, but high-low is once again not fully at the EMA, so we can't really take it. Even though it worked, you know, you have to take high-low at the EMA. This is still too far from the EMA. You can get a second entry short, no second entry short. Then we have a nice second entry long, but it was too big to enter, mainly educational wise, and the market is about to close. So very unique day. I rushed through this because it would take forever and I have to leave soon. But if you struggle today, no problem staying on the sidelines and not taking a trade, because this is simply very unique day that you're not really used to trading. Everything is moving so fast, bars are gigantic. You don't really get that much training and experience with a structure like this. So it's okay to skip it because these volatile structures don't happen as often, only once or twice per year. What is best is just, once again, like I said, wait for some clean proven structure to make your job as easy as possible and take a nice high probability setup. So yes, so I hope it was helpful. I hope you can see how we mark the chart if you took any of these setups. I don't see that many great setups. Of course, you can make a case for more aggressive setups, but with bars being this big, you really have to be careful. So I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time on Monday when we finally have, hopefully, a slower market and we can finally dive deeper into this price action. Good luck in your trading.